The theme for our event tonight is not tonight, today, is empowering innovation and driving inclusion. This could not be more relevant for where we are as an industry and where we are on the continent. Financial inclusion is not just a goal that we speak about, but it is a necessity. Millions of Africans are still unbanked or underbanked, yet we see fintech breaking these barriers, creating opportunities and transforming the lives of millions of people on the continent. So the conversations, the insights and collaborations that are going to happen here today, in my mind, will really determine the next growth, investment, and the impact in the Africa's fintech landscape. This forum for me is really a pot of brilliant minds. And I'm looking forward to all the conversations that are going to happen here today with the C-suite executives that we have, the regulators, the investors, and tech disruptors, all coming together to push boundaries, not just in conversation, but in sharing real-life data points around what they've done and what they will be doing, but most importantly, showing us what is the art of the possible. So I encourage all of you to engage, ask bold questions, and forge powerful connections. To our partners, speakers, delegates, thank you for being part of this journey. Let's make today a game changer for Africa's fintech ecosystem. I've got one important announcement to make. There's an award ceremony that's going to be happening after the conference today. So please make sure you stay for that, and you'll see who will be awarding some of those goodies too. With that, we're going to dive in and officially open again the Africa FinTech Forum 2025. It's also an absolute honor to kickstart today's conversation with a session that set the tone for the future of fintech in Africa. Fintech is not just about disruption. It's really about building a resilient and inclusive financial ecosystem that empowers individuals, businesses, and economies. We don't digitize for the sake of consuming technology, but we digitize for human beings. And who better to lead this crucial conversation than our esteemed keynote speaker, Fazana Badat, who's the Deputy Commissioner of the Financial Sector Conduct Authority. With her leadership and her deep experience, will gain invaluable insights into how fintech is shaping the future of financial regulation, of inclusion, and innovation. So let's get ready to unpack the future of fintech and finance in Africa. Please join me in welcoming Fazana to the stage. Fazana?
Morning. Is this on? Can you hear me?
They're going to switch it on shortly.
Sorry? Can you hear me at the back? A little bit now? All right. Morning. And I don't blame you, Madam Chair, for thinking it's evening. It does look like that outside today. So thank you all also for braving the cold and the gray in Johannesburg and joining us today. I just want to check my presentation's not up. Sorry, we're all on a slow start today, it seems.
Am I muted? was going to say.
The anticipation is now building up, and I feel like I'm going to let you all down. All right, there we go. Now let's check if the clicker works. There we go. Yeah, so vanity was telling me I shouldn't wear my glasses. But now the reality of my age is telling me that maybe that's not possible. So let's see how it goes. All right, morning again. Let's try this a second time. So firstly, I just want to thank BII Global and Africa Fintech Forum for the opportunity to participate in this important event. It really is an honor and a privilege to be given such a daunting task to actually set the foundation for today's discussions in a room full of experts. But also I want to say on behalf of the FSCA, I'm so deeply grateful that so many FSCA colleagues, and hopefully you'll meet them through the day, have been invited to participate in the sessions through today. This very much captures the spirit of partnership and collaboration that I hopefully will end today's presentation on. That is, that partnership and collaboration are actually the most critical success factors to help us collectively leverage the great and infinite opportunities in digital innovation to ensure the future prosperity and inclusive participation of all our people in a stronger and more resilient economy. Which brings me to the context of my presentation. So initially, I was asked to speak specifically from a South African perspective. However, the reality is, despite the fact that we do seem to be living in a time that is increasingly divisive, with so much political and ideological fragmentation in the world, the reality is that the world, and in fact, more especially the financial system, continues to be interconnected. So any conversation about securing the future resiliency and inclusiveness of the financial system must be contextualized through various lenses. Of course, the first one through the lens of us being truly South African, but very importantly, as uniquely African. And as such, as Madam Chair said, potentially powerful contributors to the global financial system. And then, of course, there's my role as a financial sector regulator, which must also be contextualized within these lenses, but I'll get to that a bit later. I'd like to start this morning by sharing a story of broad aspirations, infinite opportunities, balanced against the very real socio-economic challenges we must collectively address in order to ensure a more inclusive and transformative financial system that serves everyone, including and especially our most vulnerable. So where do we start? The best place to start is the big picture. So I'm going to talk very briefly around where we are globally from a financial system perspective, and then I'm going to bring it home locally to some of our national aspirational priorities as a country, and of course looking at it from the perspective of the African continent. So every year, at the beginning of every year in Davos, world economic leaders get together and have conversations about the state of the world economy and various other issues. Every year, coming out of those discussions, outputs around the state or the outlook for the financial system in the coming period, in the coming short to medium term. This year, last month, there were some key outputs coming out of the discussions that are incredibly relevant to the conversations that you'll be having today. Firstly, there was affirmation that while traditional finance models continue to dominate, they are increasingly under pressure, not just from rapid digital transformation, but also from emerging market powers, very important for us as Africans. There was also a recognition that in order to ensure a financial system that is more inclusive, it requires a fundamental shift in the way that the financial system operates, but also who it serves. And a transformative force driving all of this is and will continue to be investments in technology and innovation, particularly artificial intelligence. Projections out of these discussions are the use of AI in the next 5 years will increase efficiency in the financial system by up to 40%. More than that, has the potential to bring in an additional value of about 300 billion into the system. But overlaying all of this is the recognition that cybersecurity will continue to be a non-negotiable priority to maintain trust and security in the global financial system. Why did I mention the global financial outlook? Because all of these points are actually directly relevant to where we are as a country and where we are as a continent. So if we take a step back, just over a decade ago, our government published the National Development Plan, or Vision 2030, which set out certain priorities aiming to drive growth, eliminate poverty, and reduce inequality in the country by 2030. A key focus of the NDP is a focus on growing an inclusive economy. So the NDP is a very long document, and it's got a lot of priorities and a lot of pillars, but embedded in it is a recognition that every part of society, including the financial and payments systems, have a role to play in building this inclusive economy. The key role is based on the leveraging of innovation and technology to ensure a system that is more inclusive, more transformed, and has a greater level of access. More recently, last year, our Government of National Unity set out its 3 priorities for the next 5 years. And once again, central to that agenda is driving inclusive economic growth. But it was made very clear that in order for growth to be inclusive and transformative, it means that there must be active steps to ensure the inclusion of the underserved, previously marginalized, and vulnerable segments, in particular women, the youth, and the disabled. And underpinning all of this is a recognition that as a country there needs to be a lot more investment in infrastructure, as well as a recognition that public-private partnerships will be key to driving sustainable growth. Now, more recently, as you would know, South Africa has just taken over the G20 presidency for this year. This is a remarkable achievement, not just for South Africa, but also for Africa. This is the first time that an African country has held this position. Soon after taking on the presidency in December, President Ramaphosa made it very clear that the G20 presidency will not just be a South African presidency, but it will be an African presidency. He explicitly stated that the presidency will be used as an opportunity to bring the development priorities of the African continent and the global South onto the world's agenda. Included in this is a desire to have discussions around reforming the global financial system to ensure that it is more equitable and sustainable. So put them all together, these are quite lofty aspirational goals, and 5 years, not a long time to achieve them. So my next question is, are these big aspirations, global aspirations, national aspirations, local aspirations, are they reconcilable with the reality of the socio-economic circumstances in South Africa and in Africa? The answer is yes and no. So there's good news and there's bad news. I'm going to throw a whole lot of numbers at you now, just because numbers often create a much more compelling story. The good news is that absolutely there is no doubt that within Africa lies infinite opportunities. Africa does stand at a pivotal moment to be leaders of change for the short, medium, and long term, based on 2 key issues. Firstly, the demographics of the continent, and secondly, what we've already seen is the appetite and investment in digital innovation, particularly in respect to finance. Now, when it comes to population demographics, it's quite interesting because when you listen to discussions on a global stage around some of the challenges faced by more advanced economies, there's a lot of conversation around aging populations. But this is a key distinguishing feature of Africa. Africa is the youngest continent. It is projected that in the next 30 years, Africa's child population will reach 1 billion. The current population is below 25. 60% of the current population is below 25. The average age across Africa is 20. These are digital natives, individuals who have grown up with innovation in their DNA, who are not stuck in legacy, who are not stuck in the old way of thinking. These are the drivers and the leaders of change for tomorrow to ensure a financial system, an innovative financial system that is geared up to actually serve the population that will be the leaders and drivers of change going forward. From a fintech and innovation perspective, it's projected that the fintech market in Africa will be around $65 billion by 2030. The current value of mobile money transactions in Africa is around $1 trillion. So all of this is fantastic, and it demonstrates the deep opportunities that lie on the continent. But of course, there are certain very critical challenges that we also have to address and recognize. And a lot of them are steeped in the socio-economic realities of the population of South Africa, but also the population of Africa. A lot of it comes down to how much awareness is there in our people, how empowered are they to engage with digitalization, and how trusting are they of the financial system and innovation. So again, very interesting information. As much as there has clearly been great success stories across Africa showing how digital innovation can open up the financial system, we are still sitting in a situation where there are about 200 million people across the continent that don't have access to the internet. We still have 1.5 billion people across Africa that don't have access to a basic bank account. In South Africa, where there is a pretty sophisticated and well-established financial system, half the population, almost half the population, still lives below the poverty line. The financial literacy rate in South Africa is around 51%. Almost 40% of the adult population goes into debt every month just to cover day-to-day expenses. In the recent digital payment study conducted by the South African Reserve Bank, it was found that only 1/3 of the South African population are digital adopters when it comes to finance. The other 2/3 either are unable to access digital finance or have no interest and are outright rejecters. Lastly, and for me, these numbers, the numbers around fraud, are the scariest of all. Between 2018 and 2022, in South Africa, we saw a 600% increase in digital fraud. According to the latest verifiable figures, customer losses coming out of digital fraud amounted to about 3.3 billion a year. All right? So good news and bad news. But is there hope? Absolutely. Why do we know there's hope? Because we've had some really good examples of how innovation has been used across the continent to address some of these challenges. So I'm going to go through this pretty quickly because I'm sure it's stuff that you already know. But just to recap, how has digital innovation actually been used to make the financial system more accessible in a relatively short period of time across Africa? The most famous and successful story, of course, is M-Pesa. which started in Kenya but which has now spread to several African countries, Kenya, Ghana, Uganda, DRC, even as far as Egypt. What started as low-cost peer-to-peer money transfers has now actually expanded to broader financial services, savings, loans, insurance. M-Pesa this year is projected to facilitate about $500 billion value of transactions. Moving away from mobile money transfers, we've got the introduction of interoperability solutions that have actually extended money transfers to cross-border. We've got blockchain technology like Ripple and Stellar, who've also started to use digital asset infrastructure to facilitate lower-cost micro-remittances and cross-border payments. And more recently, again, beyond mobile money, we are seeing the introduction of innovations like M-Shwari and Paga in Kenya and Nigeria that are modernizing the broader financial services ecosystem, looking at things like microfinancing, savings, and insurance. What about South Africa? So everybody knows the most recent innovation in South Africa has been PaySharp. Launched in 2023, it is a collaborative exercise driven by the private sector aimed at deepening financial inclusion in the country, which aligns very much with the South African Reserve Bank's vision under Project Stamela to modernize South Africa's payment system and open up the financial system to broader parts of the community. The intention behind PaySharp was to ensure low-value, real-time payments across banks, reducing reliance for cash in the economy, for consumers, and for small businesses. The most recent stats coming from PaySharp at the end of the year indicate that in a relatively short period of time, we've had about 100 billion rand processed through this platform. Remarkably, the increase in number of transactions from the end of 2023 to the end of 2024 jumped from 2.6 million to 30 million. It sounds impressive, but is it really? Is there more that can and needs to be done? The truth is, PaySharp is meant to be a low-cost payments platform, but there are still questions around cost. It's not entirely free across the board. There are questions around the disparities in fees across various banks. More than that, PaySharp, while there has been good uptake, still operates around the periphery of the financial system, which still puts us a number of steps behind some of our other emerging market peers like India, like Brazil, who have introduced unified payments platforms that have actually been integrated into the day-to-day lives of their population. PaySharp is a great first step, but there's still a lot more that can be done. Now, you may have noticed that I'm almost halfway through my presentation, but as a regulator, I've not even spoken about regulation yet. I hope you noticed that. But it's very deliberate. Why? Broader concept of broader financial and economic resilience, the same applies for regulators. Regulators also need to understand and appreciate that they also operate and serve within the socio-economic context. This has necessitated regulators around the world, certainly in South Africa, to self-reflect around, well, what is our role in these circumstances? South Africa is a good example of an economy that has a very sophisticated regulatory framework for the financial system. But that framework is anchored in a very traditional view of regulation, which is managing risk. But as we start talking about broader issues like financial inclusion and societal and economic resilience, regulators also are beginning to appreciate that their role is much broader than that. Yes, it is about managing risk, but very importantly, this must be balanced against the imperative to enable responsible innovation, all aimed at societal protection. And financial inclusion and economic resilience is about societal protection. And this is, for example, where as South Africans, we can actually learn a lot from our peers across the continent who have not had some of the legacy issues around a very well-established financial architecture or financial regulatory framework. We've seen in the use cases, 2 examples. Ghana and Kenya have been instrumental in driving digital innovation and including previously underserved populations into non-traditional financial system. And I think a lot of that has to also do with the approach that the regulators have taken. In Ghana, for example, they've introduced a more proportionate regulatory framework for fintechs and startups that's not based on traditional institutional architecture, but based on specific functions and specific risks attributed to these fintechs. Similarly, in Kenya, the framework allows for differentiated requirements, governance and capital requirements for new entrants and fintechs, again, recognizing that there are certain barriers to entry for fintechs if you treat them the same way as you do legacy or financial incumbents. So proportionality and agility in regulation is extremely important in the context in which we're talking about today. Moving along, another example which I think is still underestimated from a regulatory perspective that has the potential to drive innovation and inclusion is interregulatory collaboration and regulatory sandboxes. I know there's quite a detailed panel after this talking around sandboxes, so I'm not going to spend too much time, except to say, once again, across the continent, and including Africa, we've got great examples of how regulatory sandboxes have allowed fintechs to test innovations in a controlled environment with closely monitored regulatory concessions. In South Africa, we've got the Intergovernmental Fintech Working Group, which is made up of a number of South African financial regulators, which has shown good to solid results. The first cohort into the sandbox was introduced in 2020. 52 out of those, there were 52 applications, out of which 8 have progressed to testing phase. But again, the question I have is this enough? If we're talking about cross-border harmonization, if we're talking about cross-border payments, is it not time to start talking about expanding the sandbox model to cross-border, cross-jurisdictional testing? And I'm really hoping that some of that comes out of the discussion today. Finally, we're also seeing regulators driving enabling environments for open finance and digital assets. From an open finance interoperability perspective, interoperability and seamless platform integration are going to be vital to financial inclusion and efficiency across Africa. Again, in Nigeria, in Kenya, and Ghana, we've seen the regulators lead the initiatives around open banking, with guidelines being issued, with several banks already implementing open banking APIs. South Africa is slightly behind, but both the Reserve Bank and the FSCA have already published policy positions on open finance, but again, recognizing that open finance exists within an ecosystem that requires collaboration and partnership. And finally, and I think this is an achievement that as the FSCA we are extremely proud of, the FSCA, and by extension South Africa, has been one of the first jurisdictions to create an enabling framework for digital assets. We introduced a licensing process for crypto assets in 2023. The last 18 months or so has been quite overwhelming, more so because of the appetite and the interest that has come from the market in undertaking crypto asset service activities. In the last year or so, we've received about 430 applications and have to date approved around 250, which means currently in South Africa there are 250 active licensed crypto asset service providers operating, which is quite far ahead even than some advanced markets that have introduced this type of framework before we did. But again, there's still issues around crypto assets that we need to deal with. So the current framework talks about localized crypto asset service providers. There's still conversations that need to be had, both with the Reserve Bank as well as our peers, our regulatory peers in other countries around dealing with cross-border crypto asset flows. So that's what comes next, which actually brings me to some emerging issues that we actually now need to start thinking about. So all of this sounds really good. The regulators have been doing a lot of strides have been made, but of course there's always the age-old pain and fear. Regulation is always a couple of steps behind innovation. And we're already seeing other emerging trends that we need to start addressing. And so now technology is not working. I think it's telling me you can't go to the next slide because you're not ready to deal with it yet. I wonder if someone at the back can move. It's literally 2 more slides and then I'm done. There we go. So looking to the horizon, what are some of the things that we're seeing around which there's still regulatory uncertainty that we need to start talking about? The introduction of centralized digital currencies across the continent. For example, the e-Naira in Nigeria. Most recently, Kenya has introduced the first decentralized stablecoin. We're seeing examples of blockchain and crypto-based platforms like Binance, Yellowcard, and Paxful that are shifting the conversation from traditional mobile money transfers to virtual fund transfers. And finally, and I know you're going to hear a lot about this, is the expanded use of artificial intelligence applications in finance, not just for efficiency in processing, but broader than that, the use of AI and alternative data sets. Firstly, for more precise fraud detection, which is going to be very important, and more importantly, from a financial inclusion perspective, one of the things we fear, or one of the challenges we have, especially in South Africa, and I know this has been in the spotlight a lot recently, is that traditional credit and risk scoring models actually excludes a large segment of the population from accessing credit because of traditional and legacy biases in the current credit and risk profiling models. What we're seeing is the use of AI to actually do analytics on alternative data like mobile transactions in order to introduce or establish alternative credit and risk profiling models to broaden access to credit to more vulnerable or underserved segments of the market. So where does this bring us? This is my last slide, with 2.5 minutes left. So it brings us back to where we started. And where we started is there are incredible opportunities for us as South Africans and Africans to transform the global financial system to make it more equitable and inclusive, especially for our people. But we must confront the reality of the challenges that we need to overcome in order to meet those aspirations. To recap, what are some of those challenges? The exponential rise in cyber and fraud risks, not just localized, but across border. How do we deal with regulatory fragmentation across different jurisdictions, the different levels of maturity in the different frameworks? We still have underdeveloped infrastructure and limited public-private expertise, again, that are instrumental to drive this growth. And finally, the people we are meant to serve still suffer from suboptimal financial and digital literacy levels and poor trust, both in the financial system and in technology. So what do we do about it? What are the critical success factors? Of course, as I said up front, strengthen cybersecurity and fraud, non-negotiable. Expanded interoperability and cross-border payments, extremely important for efficiency and inclusion across the continent. Targeted financial empowerment and literacy programs to assist and support our most vulnerable, to bring them into and engage more, not just with the financial system, but with digital innovation. And finally, so for me, this is the number one critical success factor, but I've left it to last to hopefully round up the presentation. The most important or most critical success factor in all of this, it doesn't matter how much investment we do in fraud and risk management. It doesn't matter how strong our regulation is. It does not matter how much awareness and education that we do. Every single one in this room, wow, that's like waking up in the morning. 30 seconds. Every single person in this room, every single institution, every single organization has a critical role to play in the broader ecosystem. We will not meet our aspirations of inclusive economic growth, a more equitable and resilient financial system without active collaboration, whether it's between regulators, between financial institution incumbents, and fintechs. And so on that note, I once again would like to thank the Africa Fintech Forum for in fact bringing us together to have these collaborative discussions. I thank you so much for your time, and I hope you have a fantastic and engaging rest of the day. Thank you very much. So there's a whole list of references if you thought I was making up any of the stats.
Thank you so much. Thank you so much, Fazana, and we don't think you made up any of those stats. They were very interesting stats, particularly the fraud ones. They had my eyes tearing a little bit. So thank you very much for that. What an incredible start to the second Africa Fintech Forum. A huge thank you to you, Fazana, for that eye-opening keynote that set the stage for today's crucial conversations on fintech's role in building a resilient and inclusive system. You also gave us a very good reminder of our role as players in the financial services ecosystem. We are creating systems that should advance the lives of people. Now, let's take that momentum forward and dive into one of the biggest drivers of fintech innovation, and that is regulation sandboxes. I know Fazana touched on it, and we've got a panel that's going to come up. Sandboxes are no longer just testing grounds, as you might know. They are evolving into these scalable, multi-regular ecosystems that support regional expansion, risk intelligence, and digital asset regulation. But how do we ensure that they remain adaptable, they remain insightful, and truly transformative for fintech players and regulators alike? That's exactly what this powerhouse panel is going to come and share with us today. Steered by our platinum partner, MTech, they will explore from regulatory frameworks to crypto and digital asset insights. We're unpacking the future of digital finance, innovation, and compliance. Not an easy topic. Strength to everybody that's going to be participating in that. Leading this session is our expert moderator, Jill Lagos Sherman, who is the head of policy at MTech, alongside some of the fintech blazers that we might have engaged with. We've got Kamel Cadet, who is the founder and CEO of MTech. We've got Keith Sabilika, who is the Senior Specialist of Financial Technology at the FSCA. And we've got none other than L'Oreal Gamarov, who is the CEO of Centbee. Get ready, guys. This session is about to redefine the regulatory landscape, and let's jump in. Are you guys all mic'd up and ready to come over and share your insights with us? Everyone needs to do a dance as they come on stage, because it's going to be a very difficult panel. Are you guys ready? If you're ready, come on stage. They're not ready. So this is the part where, as a moderator, I have to make something up just to buy time and fill the gap. Okay, repeat your stats. Do you want to put them up for me? I remember some of them. I remember the fraud stats. I remember the 3.3 billion losses for consumers. I do remember that. I also do remember that we've got probably the next economically active population on the African continent. We've got digital natives. I was listening. I actually do remember a lot of the stuff, a lot of the stuff that you said, and how M-Pesa is going to drive $500 billion in US dollars transactions. I really, really was. So that's awesome. But thank you so much, guys. We're ready for you, and the stage is waiting for you to come up. I'm going to ask the music desk, the tech desk at the back. When we have this dead moment, play some music for me, please. Well, I'm sure they'll be up in a minute. And let's make sure if there are any slides or any content that's ready as well as our speakers come up. There they are, they're coming up. Hey, are you taking it standing?
Well, I think I would like my panelists to be able to sit because it is about 40 minutes. That's a long time.
Yes. Can I get some chairs up on stage, please, for the panelists?
But I thought I also
Yeah, go ahead. The stage is yours now. If that is not working, use this.
wonderful.
Yeah.
Great. Can everyone hear me here?
Yeah.
Yes. Okay. So, thank you for the musical introduction. I think while we finish getting everyone mic'd up, why don't I start with maybe introducing our panel and also the topic that we're going to cover today. I really want to thank everyone for being here, but I even especially want to thank the Deputy Commissioner for covering so many of the topics that we intend to follow up on with our panel, and this was not coordinated. I think it just shows how relevant some of these regulatory innovations really are for regulators and financial ecosystems around the world, but also really especially in the African continent. So what we want to cover today in this panel, the title is on regulatory sandboxes. Scalable digital sandboxes for the future of financial services. There's so much within that title. What we really want to unpack today are things around sandboxes and digital sandboxes for scalability, for affordability, and we'll also get into sandboxes for the emerging crypto asset ecosystem and providers that are entering markets. We're going to talk about how regulatory sandboxes are great tools, how they're really important regulatory innovations for testing new ideas while managing risk. We probably all remember that Venn diagram that we just saw of a regulator having their mandates in managing risk, but also welcoming innovation, finding ways to lead to robust growth and protect consumers. And that's becoming a new skill set in doing that in the era of fintech and Web3 and crypto assets. So now that we have everyone mic'd up, I'm really excited to introduce our panelists. We have Carmel Cadet, who is the CEO and the founder of MTech. So MTech is a software company pioneering modern central banking and regulatory infrastructure. And Carmel and her team work with central banks around the world, developing this next generation of central banking infrastructure with the goal to drive financial inclusion, economic development, and the modernization of regulatory environments, financial regulatory environments. In her previous life, Carmel was the deputy chief financial officer at IBM for IBM's blockchain division, and she grew that from zero to who knows how much. We also have Lauren Gamaroff, who's the co-founder and the CEO of Centbee. It's a blockchain payments and cross-border remittance company, and was one of the first financial entities in South Africa's intergovernmental Fintech working group, Sandbox. And it's also a virtual asset service provider registered here in South Africa. Lauren, I know that you are frequently asked to talk about digital cash and cryptocurrencies, so it's really a privilege to have you here today joining us, and to also even have you here in South Africa. I know you travel a lot. Lauren, I know you also serve as the Bitcoin Association ambassador, right? And you were the co-founder of the Blockchain Academy. So that's, for those of you who don't know about the Blockchain Academy, this educates professionals on all aspects of blockchain, including regulations and software development. And we're also joined by South Africa's FSCA's Keith Sabilika. Keith, I know you are a senior fintech specialist at the authority, and you also co-lead the Intergovernmental Fintech Working Group. And that is the working group, the sandbox within that working group, right? This is one of the few joint regulator sandboxes around, certainly that I know of. Keith, I know that you're a very active advisor on regulatory frameworks, and especially balancing innovation with consumer protection. This is one of the reasons you're a great fit for the panel today. And your portfolio also includes some of the emerging technologies like crypto assets, digital payments, and subtech, supervision technology. So I'm going to very briefly introduce myself. You're not here to, though, hear me talk. I'm Jill Lago-Shemin, and I'm the head policy at MTech. I'm also a research affiliate at the Cambridge Center for Alternative Finance at the University of Cambridge. And I'm really excited to be moderating this panel. So I'll briefly talk about what we're going to dive into, and then I'll be posing some questions to the panelists, and I think we'll also have some time for Q&A. So please do raise your hand or jot down any questions that you'd like to pose.
I think they have a chair for you. Okay.
I'm a little terrified this mic won't work.
Test.
No?
Test.
Can everyone hear me?
Testing.
Fantastic.
Oh, can hear me.
Okay. Or they'll only hear you, yeah. So what we're going to dive into, other than sandboxes as really key tools in regulatory innovation, we also want to talk about some of the broad ideas of sandboxes and some of the misconceptions of sandboxes, and also why sandboxes today are such critical tools for welcoming in safe innovation into financial markets, especially in this era of rapidly digitizing financial ecosystems. I'm not going to say a bunch of numbers. We all just heard them in the presentation before us. And so what I'd like to start with is, Carmel, you work with many regulators in your role in the implementation and coordination of new regulatory infrastructure. In terms of sandboxes, could you maybe start us off and talk about what you think some of their greatest value is?
Thank you for the question. So for those of you wondering what is a regulatory sandbox, that's usually a question that comes up in the conversation of innovation. For regulators, the idea of regulating financial products requires understanding regulatory framework and established financial products. With innovation moving really fast, regulatory sandboxes introduce essentially a concept to say, how can we as regulators oversee innovative products while we don't have regulatory frameworks yet? And therefore, we cannot license the service. We cannot particularly supervise them. We don't even know sometimes what metrics, what compliance method we should apply for the product because it is so new. What is the difference between a stable coin and a real world asset, for example, in the world of crypto? So regulatory sandboxes were a framework usually regulators use to try to understand innovation as they learn and put regulatory frameworks in place. The value that we saw in digitizing that process is not only of course, the typical application, knowing what door to even knock on. If you're if you're an innovator looking to engage a regulator, where do you go? What is the process of engaging and going to market with regulatory oversight, even if your product is not yet regulated? So we really enabled regulators and central banks to say, how do we establish a process like this? But more importantly, once you have that application process, once you have the engagement with the innovator, you can now start, with better technology, do in real time market monitoring, which goes back to the risk management aspect that we were talking about earlier. Regulators are very risk adverse. They have the mandate to protect the broader consumer landscape and consumer protection. So if they're going to say yes to something, they need to feel confident that they understand the risk profile of it, and being able to monitor that with open banking technology, APIs that a lot of the innovators today are very familiar with, very comfortable with, is what we've been able to build and help regulators with. Really an end-to-end process on how to digitize the regulatory sandbox, but in a way that drives risk management and in a way that is developer-friendly and fintech-friendly as well.
I'm so glad you touched on that topic about risk management as being a key value and key benefit to regulators with the sandbox, because one thing I wanted to touch on briefly before I go to the next question is there are some misconceptions about sandboxes, at least in my experience. And I've done quite a lot of work with some of the originals in sandbox development, out of the UK and the FCA, and some of their experience also as they've consulted with and supported other regulators around the world. And there is I believe it's a misconception that sandboxes can be very expensive and very resource intensive. It's possible they were maybe originally, but it seems today that they are becoming more affordable and more scalable. Are you seeing that?
I definitely think so, especially when you think about the integration and the paperwork process today that resides a lot of regulatory processes. Having a folder on someone's desk waiting for them to come back on vacation while the company is waiting to talk to investors and fundraise and waiting for regulatory approval, it's usually a burden on the broader innovation/risk management. And if you think about it, that process itself is not doing risk management, right? It's just a bottleneck in the process. No one is looking at the data, no one is looking at the documents. It's just, but you're right, with technology now, it's becoming much easier to streamline and accelerate the deployment of a regulatory sandbox process.
Yes, and I'm sure, especially in the African continent, with all the digital natives that will soon become regulators and managers of the sandbox. There'll be even fewer resources. So let me turn to Keith now. As a regulator and someone that's one of the co-chairs of the multi-regulator sandbox, one thing I was looking forward to exploring on this panel was the fact that South Africa has a multi-regulator sandbox. In my experience, especially in research, this is such a valuable use case for others around the world. So I'd love to, pose kind of a broad question, have you answered however you like, just to learn more about, how was that multi-regulator sandbox launched, designed? How'd you figure out governance?
All right. No, thank you so much for that question. Allow me to go back in time. Let me be a history teacher for now. Yeah. But I think we all know that innovation in the financial sector has been driven by incumbents in the past, like years back, banks, insurance companies, which were heavily regulated. But fast forward to the last decade or so, it's being driven by fintechs and these players that are coming in and they want to dominate, they want to take a bigger market share. They're coming in with innovations that are challenging existing regulation. So regulators in South Africa picked that up. That was back in 2016. Then they came together and then they formed the Intergovernmental Fintech Working Group. Okay. The whole idea was to get to understand the fintech ecosystem, the developments that were taking place, so that they can identify the opportunities and the risk and how they can regulate that space. When they came together, then they decided to do a study. In that study, they wanted to just scope and map the South African ecosystem. That was done in 2019. And one of the findings in that study were that the ecosystem is small but growing fast. Regulators need to come up with mechanisms to monitor the risk and the opportunities that are coming from there. And one of the recommendations, or what the regulators agreed on, was to come up with a multi-regulator approach to engaging with these fintechs, because they also found that fintechs were struggling with issues around licensing, understanding regulations, and the like. So they designed an innovation hub, which is made up of 3 facilitators. One of them is the Regulatory Guidance Unit, where we just provide guidance on regulation and policy matters to fintechs. Then we have got the Regulatory Sandbox, which we are talking about today, where we allow fintechs to test their innovations in a controlled environment, with regulators watch. Then we've got the Innovation Accelerator, where us as regulators just explore interesting topics and we learn from one another and the industry as well. So that's how we came about with the Regulatory Sandbox. It's got participation from 7 financial sector regulators. So these are like the key South African financial sector regulators. So we've got FSCA, the Reserve Bank, National Credit Regulator, SARS, NCR, Competition Commission, right? But the Innovation Hub, the core team, is made up of the FSCA's FinTech department and the SAB. So they are mainly responsible for the day-to-day operations, but there is participation, active participation from these other regulators, and the IFWG is responsible for governing the regulatory sandbox. So that's how it came about, and over the years, it has transitioned, it has grown, and it has changed in the way that it does its operations.
So just one further question, because I'm such a sandbox nerd, I can't help, is when the joint FSCA and SARB, is it you together as a unit that are reviewing the applications and overseeing all the participants in the sandbox?
Yes. So the SARB and the FSCA, they form the Innovation Hub core team. So they manage the applications when they come in. So if the application that comes in from a fintech requires the NCR to participate, or the National Credit Regulator to participate, they engage that, they bring them to the table, and then they engage with the fintech until they test. So that's how FSCA, the SAB, and all these regulators all come together, to map the way forward, the strategy of the entire IFWG, because the entire IFWG is the one that governs the sandbox.
Okay.
Yeah.
Okay. That's really interesting. Great. If I wanted to ask a question about innovative fintech in the sandbox, I think I would want to ask a market participant. So, Lorian, now I get to go to you. So, Centbee, the company you co-founded, was one of the first participants in South Africa's regulatory sandbox. In addition, you are also a cross-border payments provider and a virtual asset service provider as well, right? Those are very relevant characteristics for what we're talking about today. We'd love to hear about kind of your experience going through the sandbox as a cross-border provider and as a VASP.
Well, I guess that's a general question that I'd have to turn into a nutshell. But of course, right off the bat, it was really great that South Africa did this. Obviously, a lot of countries are behind on that, and South Africa certainly led the charge. And so I was very grateful that there was such a thing as a sandbox that we could apply for. And so that was really a great step forward in terms of the country and in terms of this industry that's now burgeoning. Of course, when you create a sandbox and you have these different service providers all trying different things, even though it sounds like they're all doing the same thing, in an industry as complex as blockchain, there are all sorts of different ideologies and agendas and goals that people are trying to achieve when it comes to blockchain. Blockchain isn't just digital cash, let's say, or digital assets. There's a lot going on in this technology that makes it fairly complex, I'm sure, as a regulator who's just trying to create a kind of one-size-fits-all sandbox that can any of the industry participants can now join, because of course, what are they trying to achieve? What are they trying to do? What is their target market? What product are they trying to deliver? What service are they trying to provide? And so when you come into a sandbox like this, I guess it's like everything when it comes to those one-size-fits-all solutions. You have to then try and shoehorn your business model or whatever it is into the constraints that are provided by that sandbox. And so, of course, the sandbox, it's a sandbox. It's not the open world. It's not like as a company you can now suddenly open for business and try and start attracting customers, because you obviously are limited in how many customers you can have and how many transactions you can process. And so, on one hand, of course, it's nice to be able to feel that you're being supervised, but also the reins are off somewhat. Because of course you're not obliged to fulfill the same obligations in terms of incumbent, let's say, financial service providers. So that aspect of it is good, but I still think that when it comes to trying to test out your business model in terms of crypto, it's very hard to just say we're going to try this in a small way. When you're trying to build a business, it's not just about reporting and risk and all that. It's scale, and it's very hard to try and really push the boundaries, which is what the sandbox is supposed to allow you to do, when you have a lot of constraints that might be relevant to some service providers who are trying certain things, but then not with other service providers. So even though I'm very grateful that it is a sandbox, I still think that it's difficult to, especially in blockchain, which I said, it's so complicated and requires actually a lot of understanding from the regulators so they know what they're dealing with. Nowadays in social media and the mainstream media, even when we talk about crypto, there's this whole aspect of it which frankly is not how Bitcoin, the original version, because there's multiple versions today, what its goal was. Bitcoin, as originally devised, was a regulatory tool. It was a compliance tool. It was there to eliminate fraud and all those sorts of things and create transparency. But of course, blockchain has now become, or crypto has become something where one of the fundamental pillars, it seems, around the majority of people in crypto is that it's ungovernable, it's unseizable, it's unconfiscatable, it's opaque. And so this is now something that you can't just, as a regulator, say, all right, we're just going to bundle all the crypto into the one box and the sandbox and everyone's going to play nicely and we're going to figure it out at the end. There's still a lot of education that's required from a regulatory standpoint to be able to correctly categorize those crypto companies and put the specific controls and boundaries and guidelines and guardrails around that particular business. I just want to end this statement by saying that to that point, when it comes to regulatory sandboxes, when you're dealing with an industry which is 99% outspokenly anti-regulation, you're going to be hard-pressed as a regulator to figure out how do we allow this to continue. Everybody on crypto is outspokenly anti-government, anti-regulation. I've been involved with Bitcoin for a very long time, 15 years, and the original idea was to create a regulatory compliant digital cash network. Cash meaning it has to comply with rules around traceability, transparency, and all those things. And identity, KYC, anti-money laundering. That's why Bitcoin, as originally invented, was pseudonymous. It wasn't anonymous. So there's a lot going on in terms of crypto that regulators need to do their homework on before they can create a one-size-fits-all little sandbox and put all the crypto players in together and hope that's going to allow them to finally bed down a regulatory regime and a licensing regime with the right checks and balances in place. So it's very complex, and I'm glad people like Keith are involved as well. But it's a difficult thing. There's still a lot of education from a regulatory standpoint to correctly design those sandboxes.
Yeah, absolutely. This is a great panel because we might slightly disagree. Where I don't fully disagree with you, but often when I talk about educating regulators, especially in some of my work at the Cambridge Center for Alternative Finance, we often turn to use cases of regulatory innovations like innovation offices, which can really promote more engagement between the industry, emerging technology industry, and regulators, and also sandboxes as a regulatory innovation, as a mechanism by which not just to allow providers to test their products, but also as a way of really educating regulators on the new technologies, the new business models, and getting real visibility around some of the potential risks as well. Now that it's been a few years since your time in the sandbox, and also we're clearly entering an era of digitizing finance, but also really increasing digital assets and crypto assets in markets, do you think there's a place for sandboxes specific for VASPs, for virtual asset service providers?
Yes, absolutely. You need to have visibility and oversight from a regulatory standpoint. And given that this industry is nascent and, again, so confusing, it's vital to be able to do a sandbox, to be able to get that understanding. So I do believe in them, and I'm very grateful again, as I said, to we have such a thing. And so there's not going to be any other way to figure this out, because of course, you can't just say no or say yes. You have to have some kind of oversight. And as you say, that's the learning process. So it's definitely going to be interesting to see how things pan out. I mean, it's very interesting that there are 250 already licensed crypto asset service providers out there, but you're probably going to find that almost all of them are those ones that have been licensed now are really just doing that sort of crypto trading kind of thing, arbitraging or whatever it is, just really just speculation, enabling speculation, and that's not really what blockchain is fully capable of. So I'm very interested to see those other 200 and however many that are remaining, what kind of companies those are, because I'm pretty sure those aren't those easy to categorize as in, okay, you're just providing some kind of trading service. I'm pretty sure those are dealing with those cross-border aspects of blockchain. But just because the technology, I just want to add this as well, just because the technology is cross-border, remember the internet is cross-border, it doesn't mean that the technology being cross-border is itself the problem. It really comes down to the entities, the regulated entities and the service providers, and making sure that you put the right constraints onto those businesses. So the internet is cross-border, inherently global. Blockchain really as a protocol, that's all it is just another network protocol. You might have heard that blockchain was this big unstoppable money thing that nobody can control, but it's not. That's one of the great misunderstandings of blockchain and crypto, and unfortunately been the reason why so many people have been bewitched by this whole thing and think that this is the easy path to riches, or easy path to just moving money to whomever they like, wherever they like. That's the great misunderstanding. But those businesses need to be shut down. People who and people who are involved in that, who are thinking that this is now a great way to skirt around regulations. And I'm not obviously as a businessman, always rah-rah for regulations, but in this particular instance with blockchain, I think that the world is so misguided by ideologues, especially anarchists, and I feel that regulation has a massive role to play here. And this regulatory sandbox and licensing regime is the first step to be able to prune off and eliminate the bad element we need to go through that process right now, because it's giving the rest of us who are trying to provide legitimate services and low-cost transactions to the underserved, underbanked, we are getting a bad reputation because of all these crypto people. So I'm pleased that this is now happening. We can get rid of the dead wood, and we can look at this technology as an enabler for so many billions of people around the world.
Yeah, no, absolutely. I'm so glad you mentioned that. And that also speaks to what we heard just a bit earlier about the regulator's really important role in building trust in financial systems. So what happens when your financial systems, your financial ecosystems are digitizing very rapidly? What happens when your consumers are adopting digital asset products and using crypto asset products rapidly? You want to protect consumers and maintain trust in your ecosystems. And I actually remember quite distinctly when I believe it was a deputy commissioner at the FSCA when they first introduced the regulations around virtual asset service providers. And one of the reasons was we need visibility over this. It was not this, as you said, this is going to solve all our financial problems and all financial inclusion, but consumers are using this. We need visibility over this. And they also now have the ability to enforce consumer protection, require consumer protection, enforce consumer protection. Keith, before I go back to you, Carmel, I did want to give you a chance to add anything to what Lorian has shared, especially around sandboxes for VASPs. And if there is, that's potentially a key, maybe important next steps for regulators.
For me or Keith?
For you first,
Okay.
and now I'll come back to Keith.
So I think it's really good feedback, especially hearing that from participants. We are seeing the growth now and regulators looking forward to use what they used to have as a regulatory sandbox more generally and applying that for virtual asset service providers. And you're spot on, because when you think about virtual assets, there are different categories that bring along different risks. And understanding those risks is ultimately what the regulator needs to understand in order to say, here's a licensing requirement around this particular service because the risk model is this way, and here's our risk appetite, and here's how we think consumer protection can be done. That can be, for a stable coin versus an exchange, right? And saying, well, they're both providing virtual asset services, have the same capital requirement, have the same KYC, and it doesn't really work that way anymore. And that's the truth. It's a lot more complicated than that. In addition to that, you have many more variables to take into consideration: which network, which protocol, which third-party services do you have around your particular product? Is it domestic? Is it cross-border? What is the other jurisdiction? How are they regulating that? Is that allowed? And you as a regulator saying yes here for a cross-border product that needs to go into another jurisdiction that bans it, what do you do, right? And it's a lot more complicated than that. And yes, a digital sandbox is such a critical tool now for regulators to take the time to understand, because putting the regulatory frameworks in place are going to be very, very important. And getting that right is what I think everyone is hoping that they do.
Yeah. No, I'm glad you mentioned or specified a digital sandbox for regulators of crypto asset service providers. For myself, when I try and imagine overseeing and learning about the behaviors and processes of a virtual asset service provider, and not doing that with a digital platform, doing that in a manual way. I just can imagine the number of resources that would take, the length that would take, and then during that time, that's time where there's delays, and that's delays lead to poor oversight and greater risk.
Yeah, and waking up in the morning and seeing the newspaper headlines and trying to figure out what's going on. But I'll talk about that today on my keynote on how we're using technology to help with.
That's at 11:30.
Yeah,
right?
11:30.
Yeah. So Keith, you've heard us, not just us, many have really looked at South Africa's experience, approach, progress in both the development of regulation of virtual asset service providers, but also in the creation of the IFWG sandbox. Curious if you might have anything to share on what are the next aspirations for this sandbox?
Right. No, yeah. I think from some of the comments that have been made, it's important to highlight the transition for regulators in changing from 2020 not wanting to get involved in crypto assets.
Right. 5 years ago.
to now FSCA licensing, that was a long journey, but there was a lot of learning that took place, and IFWG and amongst the other initiatives that were there, I think the learnings contributed to that change in the policy and the stance that we are in at the moment. And the sandbox contributed a lot in terms of the cases that went through, sparked a lot of dialogue in terms of the existing regulation and how it's applicable to CASPs and how we can regulate that. So that was quite good. And we understand that this environment is quite it moves fast. We need to be agile. So it's one of our aspirations to make sure that we are agile. We're not stuck to our processes. We constantly reviewing how we do things. So when we started with a cohort-based, and then we figured out that there were some challenges in terms of processing those applications. They were taking long, some processes were a bit manual, and then we decided to change and move away from that. Now we have moved to, a rolling-based approach where we are consistently open. So every time we get an application, we process it, and if it meets the qualifying criteria, then we test, we pick up learnings, and then we move on like that. So those are the things that we have done. We can't run away from the discussion around leveraging technology and how we do our sandboxing. So we constantly have those discussions, asking ourselves, how can we do things better? But at the end of the day, we want to promote innovation in a safe way. We want to contribute positively to the financial ecosystem through the sandbox.
Right. Yeah. So I have one more question for our panelists, but before I do that, I thought I might turn to see if are we going to take questions from the audience? Yes. No.
It's too early.
I can't see anything, so yeah. Great. There should be a microphone coming behind you.
There's another one coming.
Yes.
Working in takes 1, 2.
1.
Okay, cool. So I guess this is more for the regulator sort of side of. I am curious about how exactly what the actual consequence of a regulatory sandbox is ultimately going to mean. Because what I've experienced is people go into the sandbox, they do stuff, but very rarely there's like an outcome associated with you being a part and parcel of that sandbox. And I'm not sure if that's just a time lag thing between, like regulators are sort of quote unquote catching up or whatever the case is. But I am curious if those sandboxes actually reach the desired outcome of education, to your point, because sometimes it's a little, it feels like the enforcement of that education isn't actually there. So it's, the abstract conceptualization and philosophy around, let's regulate blockchain is there, but like the very practical stuff, sometimes I don't see coming out of like those sandboxes. And so I am curious as to how do we bridge the gap between that education translating into customized regulatory frameworks for very specific technology stacks like blockchain. Yeah.
All right. If I may try to answer that. So I think we also need to understand that the sandbox is one of the tools that regulators use. And changing regulation takes time. And these learnings, as we have picked them up from the cases that we have tested in the sandbox, they have informed future regulation, which might not come into effect the next day when the fintech comes out, but it contributes in the long term. So it then sparks conversations around the amendments that we need to put in place. And we may not see them tomorrow, but they will come. So I think we need to understand sandbox as it's not a silver bullet which will bring change tomorrow, but in the long term, it will contribute to a positive outcome. We have cases that have gone through that have, resulted in regulators thinking of amending certain pieces of regulation. And when that happens, it just doesn't apply to that particular fintech. It applies to the whole ecosystem.
Yeah, I think this is a great question, so I'll actually just add something to that from my own experience observing different regulators. I think that you made a great point with your question on timeline. I think timeline is part of it to some of the impacts of a sandbox cohort or sandbox development, and those impacts being realized practically in regulatory developments or changes or compliance requirements developments. I think there's a time lag there. I would also say that this is what innovation, a sandbox really is a regulatory innovation, and this is what innovation is. You start with something that's imperfect, and you learn from it, and then you improve it and adapt it. And so we're getting to a point where these sandboxes are becoming, more developed. They're still new, but not quite as new. I think there are probably between 80 and 100 sandboxes around the world across different kinds of financial regulators. I know of insurance regulators have a sandbox, and so I hope that that's, also informative. Carmel, I know you work with a lot of different regulators have an interest in sandbox. I don't know if you have anything to add.
Yeah, I think Keith got it. You probably don't see the contribution right now, but when we think about some of the metrics and even the conversations that we have with the regulators when setting up a new sandbox, what are the requirements? What are you looking for? What is the testing plan? That very much goes into, it forces them, and then it really forces the regulator to sit down and say, what do we want to test? How do we want to look at this innovation? What are we looking for? What are the metrics? So we build dashboards. We have APIs and we have dashboards for the regulator to be able to monitor different metrics. That's being able to see the trends, the volumes, the prices, the performance of those different participants in order for them to have data in order to go into a broader conversation on regulatory framework. So I think the contribution, and regulators will see over time what the correlation is between regulators who have sandboxes and regulators that didn't have sandboxes on how they end up creating fit-for-purpose licensing frameworks around different service types. I think that will be a giveaway on whether you had a sandbox or not, depending on how you put the regulatory frameworks in place.
Yeah. Okay, so a few years from now, we'll be back up here talking about that. Yeah, I think we have one more question.
Is there one more?
So how then can regulators then strike a balance between providing flexibility in a regulatory compliance within a sandbox and maintaining accountability through ongoing monitoring and clear expectations?
Oh, this is a great question. Actually, Lorian, as a participant, what do you think? You go for it? Should we?
Well, I think that was...
I can give it to you.
Yeah. That would be all.
Yeah, if you can say that again.
You strike a balance between providing flexibility in regulatory compliance within a sandbox, right? And maintaining accountability through an ongoing monitoring and clear expectations.
Okay, all right. So what happens when a fintech is testing in a sandbox? When they go through the process, we have a testing plan, right? Where we outline what is to be tested. We outline the parameters, if I can put it that way. And consistently, they have to come and report. So currently, they report monthly what they're experiencing, the risks that they're experiencing, and how they are mitigating those risks. So that's how we monitor. Then at the end of the testing period, there is a report that they provide us with, which encompasses the whole testing process, what they've encountered, and then we then consider what they have experienced in that report in terms of the next steps. So when it comes to the next steps, we can either allow them, we can extend the exemption, because when they are testing in a sandbox, sometimes they're given an exemption. We can extend that exemption whilst we are rethinking on how we can work around regulation, or we can ask them to follow a certain path in terms of applying for a license. But it's a case-by-case situation depending on what's being tested in the sandbox.
Yeah. We saw that for other central banks too. One central bank we work with essentially started with the licensing requirement that they had, and then really thought about this is for sandbox, this is for innovators, this is for fintech, really started taking out some of the more stringent requirements to make it a bit more palatable for newer comers. And then when it comes to the compliance requirements, you don't need to have all the fully onboarded services that you would need if you're launching a full service, because it is more contained. And when we talk about containing environment and control environment, is the testing plan that Keith mentioned. How many customers can you have? How many transactions per day? And having that flexibility to come back and say, can you extend? Can I do more within the sandbox? Can I stay longer, given that we're still learning about our product? And the regulator has the discretion to adjust as they see fit.
Great. So I'm going to look at the event moderator. Do we have time for one more question, or are we out of time? Are we? I think,
MC?
Yeah.
Hello.
Yeah.
Hi, do we have time for one more question?
Or are we out of time?
Call it.
Okay, great.
Because we are out of time.
Okay,
Yes.
understood. Great. I want to thank all our moderators. As you see, we could probably go on talking about many interesting and really timely issues of today. And a lot of thanks to the hosts and to BII Global for organizing this.
Thank you.
That chair was wet.
To my right. You got, so you can go around this way.
Oh, got it.
So my panelists, can you please come to the right, and we'll give you some goodies and some gifts for all the intellectual knowledge that you've shared with us today and the time that went into prepping. All right, I've got something I need to be resolved. One of the chairs is damp, so just take note of it for the next panel that we're going to have. But the next one is a speaker. You good? All righty. We're going to proceed in the interest of time. So let's shift gears to something that lies at the heart of fintech growth in Africa, and that is trust. As someone who studied psychology, I always say it's very difficult to measure trust, particularly in financial services, but we are all selling trust. In emerging markets, trust isn't just a nice to have, it's the foundation of adoption, of innovation, and of financial inclusion. But how do we build trust at scale in a region as diverse and as dynamic as the African continent? The answer lies in digital identity, a powerful enabler that enables or reduces fraud, that enhances security, and boosts the customer confidence. In this keynote session, our platinum partner, Encode, will unveil its blueprint for Africa, sharing how cutting-edge identity solutions can drive trust, drive security, and seamless digital experiences across the African continent. And to lead this critical conversation, we have Alejandro Ballon. I hope I said it correctly. Head of Sales for Africa at Encode, ready to take us on a deep dive into the trust imperative in emerging markets. Get ready for a session that is packed with insights and to reshape the future of fintech trust on the continent. Over to you, sir.
Thank you. Good morning, everyone. Can everyone hear me? Well, the room looks much bigger from this end. Good morning, everyone. Thank you for the introduction. My name is Alejandro, quite on point. I know my name is quite difficult to pronounce, so you feel free to call me Ale. Can we please share the slide deck on screen? Or do I have to click? So yeah, the keynote will be focused on building trust in emerging markets. A great panel right before our keynote. I will be touching upon a few things regarding the evolving regulatory landscape and its impact, particularly on trust and adoption of digital onboarding solutions like the one we offer to the market through Encode Technologies. Having a few technical issues, I guess, with the slide deck itself. There we go. Apologies for the voice, by the way. Our team and I had the made the great decision to go on a 6-hour safari throughout the rain last night, so I've woken up a bit under the weather today, so apologies for that. So whilst we wait for the PowerPoint or technical issues to be solved, I will address the small elephant in the room. Whilst we are in fact representing Encode Technologies, some of you might not necessarily be aware, mid last year, Encode Technologies, who's a global identity verification leader, acquired a company called MetaMap. It's now rebranded to MetaMap and Encode Company, which we're still maintaining, particularly for the African market. Do you need me to click on this end? Apologies. There we go. So thank you. Just make sure that this is working. Yep. Cool. So again, thank you everyone for your time. My name is Alejandro. I've very recently transitioned into heading the sales team for MetaMap, an Encode company in Africa. I've been part of Encode for the past 5 years, spearheading different roles like business development, partnerships, direct sales, and yeah, glad to partake on this challenge to increase or grow our footprint as a company in Africa. It is no coincidence that Encode's mission has been, since inception, to power a world of trust, directly connected to what we'll be speaking about today. As a means of introduction on Encode Technologies, again, we acquired MetaMap mid last year, and it's been quite the successful integration for the past couple of months. Encode Technologies was actually born in 2015 as a B2C photo sharing application called Flashback. It would automatically plug into the backend camera rolls of both iOS, Android devices, recognize faces, and share images with those people that were recognized on your camera rolls. The reason why I like saying that to begin the introduction on Encode is facial recognition and development of technologies have always been at the core of our company. Since then, fast forward to 2018, our CEO decides to submit our facial recognition technologies to the National Institute of Standards and Technology, more commonly known as the NIST, which tends to be the leading authority when it comes to ranking facial recognition technologies. And we found ourselves competing against IDEMIAs and other industry dinosaurs that had been playing in that space for a while. Citibank, looking to launch their first digital onboarding solution late 2017, saw us in that ranking and decided to approach us and see if we'd be interested in to participate in that particular RFP. 112 meetings later, our CEO quite proudly says, Citibank became our first enterprise client, and we pivoted into the identity verification space. Late 2021, we did raise a Series B funding round of $220 million at a unicorn valuation from Tier 1 investors like General Atlantic, SoftBank, DN Capital, and strategic partners like JP Morgan, dLocal, Coinbase, and many others. Something quite interesting of this funding round was that the individual CISOs of companies like Robinhood, Lemonade, Amazon, Coinbase, and others invested their own capital into our funding round, which sheds a lot of light in the value of the product that the companies built. Quick overview of the agenda and a few of the things I will be covering. Related to the topic of the keynote, of course, the trust imperative in emerging markets. We'll then speak about the role of digital identity in fostering trust, which we'll see how trust directly impacts the ability to grow economically and also in terms of financial inclusion. Lastly, to tie up some of the points I will be covering during the presentation, I will walk you through how MetaMap's blueprint for Africa will solve for some of these region-specific challenges. So first off, we've got the trust imperative in emerging markets. I'll just put all of these here. Why trust matters, right? The first thing is emerging markets, call it Africa, call it LATAM, are usually the scope for most fraudsters for multiple reasons. In this day and age, particularly with the ease of access to Gen AI tools, deep fakes and whatnot, it is making it much easier for fraudsters to commit fraud, particularly in emerging markets like Africa. Markets are more prone to fraud risk, again boosted by Gen AI and other things as infrastructure gaps, weak processes on KYC. In example, in 2024 alone, South Africa saw a surge of over 300% in identity fraud itself. Trust also matters in emerging markets in terms of financial inclusion. There is, again, a direct correlation between the trust-confidence interval and the amount of financial inclusion in specific regions. Trust fosters financial inclusion. Moreover, adoption hurdles. There is low financial and digital literacy, which can undermine the people's capability or confidence in particular fintech platforms, banks, regulation, and whatnot. And lastly, with the fast-paced acceleration in digital transformation, customers sometimes hesitate without the right solutions or reliable identity verification methods in place. This is just a quick slide that sort of showcases the effect of Gen AI, deep fakes, and new solutions that have come out to market it's basically the rise of identity fraud and how that's impacted cost, reputation, and erodes consumer trust, which is exactly what we're here to go against. So the graph speaks for itself. 70% of businesses have claimed increased losses over the past year, and we've seen from 2022 to 2023 30 times increase in deepfakes, which directly impact businesses, again erode trust, and there's more people just stealing identities of others and whatnot. The next topic we will cover, and this is for some reason not loading correctly, are the barriers to trust in emerging markets. This talks about the ecosystem in general. First is the low trust in institutions, from banks to fintechs to government institutions, and I think it was correctly mentioned in the panel before me. There's a bit of skepticism towards how things are handled at the bank, fintech, or government levels. And we see, particularly in the African market, very weak verification systems that make fraud easier. I spoke about infrastructure gaps and why that makes emerging markets more susceptible or prone to particular fraud, talk about internet connectivity, mobile broadband, availabilities for high-end devices, which makes our job as identity verification vendors much easier. Naturally, low-end devices tend to capture lower quality images. There's also a limited access, or people have limited access to formal IDs, and there is an inconsistency in terms of national ID infrastructures. Moving on to the regulatory and compliance hurdles, as the previous panelist mentioned, the regulatory landscape is ever evolving, and rightfully so. We need to continue evolving to allow for change and adoption of new technologies that allow for increased trust, increased value for businesses, increased financial inclusion. And yeah, we'll continue the presentation. The next topic in the agenda is the role of digital identity in fostering trust. So we'll quickly pull these up. Now, why is digital identity verification key to fostering trust? Again, this speaks particularly in the ecosystem. The next slide will cover more specifically how digital identity verification, or well-executed digital identity verification solutions, will generate trust on the end consumer. So talking about the ecosystem in general, we do see how fraud prevention and security generate trust. If there is a solution like MetaMaps, for example, that does offer real-time results, an end-to-end fully automated solution, leverages biometrics, leverages liveness solutions to make sure that the person who's trying to onboard or open an account is alive and present at the time of doing so, that generates more trust in the ecosystem in general. Moving to financial and digital inclusion, we do believe that secure digital onboarding processes will enable accesses to banking, government services, and online platforms, which unlock economic opportunities, again, fostering better financial inclusion and economic growth for the particular region. Lastly, in terms of regulatory compliance and risk, by the way, on the financial and digital inclusion, I did have a very interesting example, particularly in Kenya, focused at M-Pesa and its digital initiatives in 2019, where they basically, through M-Pesa, mobile payments platform, enabled above 80% of the adult population to have access to the financial ecosystem, right? Tackling the underbanked, let alone the unbanked issue that we've got in emerging markets today. And lastly, focusing on the regulatory compliance and risk reduction, digital IDV is key to fostering trust through allowing digital identity processes to be aligned with KYC and AML regulations in specific geographies to reduce fraud-related risks for both businesses, consumers, and governments. Now, focusing a bit more on the individual. Perfect. So again, on the individual itself, we strongly believe that a fully automated solution that is customer-centric will allow for increased trust between the end user and the actual company they're trying to onboard. A seamless and secure onboarding flow that focuses primarily on eliminating friction at signups while ensuring the authenticity of a person will allow for increased trust between end users and companies, governments, fintechs, you name it. Talking about data privacy, our solution, as I mentioned in the beginning, is an end-to-end fully automated solution. It does not rely on humans to manually review your ID data or your PII data. We strongly believe AI is much better suited than humans to analyze images at a pixel level and make decisions or assign risk scores to an individual's identity rather than sending those images to a call center in low-cost labor countries like Peru or Mexico. There's no reason why identity verification vendors should be relying heavily on humans to have access to your PII data, for example. And lastly, we strongly believe governments should play a major role as enablers or digital enablers, allowing solutions like ours to be heavily aligned with the regulation itself. And as an example, enabling institutions like ours to have access to endpoints that allow us to cross-reference data that we've extracted from a specific type of ID against what we call a source of truth or source of records, which is the government database. There are multiple cases. The South Africa Home Affairs, for example, will allow companies or identity vendors, for example, to onboard customers by asking them for their ID number and matching their face against the face that the government database has in place, which should allow or reduce risk to near zero. Moving forward, I will now speak about our solution and our blueprint for emerging markets, in this particular case, Africa specifically. So, again, we are an end-to-end fully automated solution. We acquired MetaMap mid last year. MetaMap has a very strong book of business, both in Africa with plus 50 clients and LATAM with over 100 clients. We, as a software as a service solution and as a company today, service over 400 companies worldwide in 50 different countries. The platform itself is extremely flexible. It is very easy to drag and drop different modules that allow businesses to cater their onboarding flows for different geo-regulatory requirements. South Africa might have X requirement for a bank onboarding, whilst Kenya's might be a bit different. So we can allow one same customer to have two different onboarding flows to cater for compliance in Kenya versus compliance in South Africa, for example. Few of our clients on this side of the world, and we've got a few from LATAM as well. We're working with the likes of EcoBank, FCMB, MoneyPoint, dLocal, who also are investors, and a few others. Quickly skim through this slide. A bit about the solution itself, heavily focused on user experience. Again, we're a technology-first company. We focus primarily on pushing the boundaries of technologies to enable best-in-class user experiences for our customers. There is a direct correlation between user experience and conversion rates. Most companies are looking to convert as many legitimate customers as possible, and we strongly believe focusing primarily on user experience without compromising on fraud will allow our customers to do so. When talking about accuracy is extremely important in multiple stages during the onboarding process itself, from being able to correctly extract data from a particular ID to either populate CRMs or cross-reference data against sources of truth, to making sure we're as accurate as possible when assigning certain risk scores to people's faces when taking a selfie, for example, to match the selfie against the ID image. I've got a quick video on the next slide, which will shed light on our fraud lab, which is mentioned on this particular slide. Again, we are at the forefront of developing technology, and particularly with the rise in deepfakes, Gen AI, and all these new fraud methods, we do continuously, on a day-to-day basis, try to develop technology to maintain ourselves at the forefront of these kinds of fraud. Can we play the video? It's just a quick 1-minute video. Hopefully we can...
Our relentless efforts are focused on minimizing fraud. By capturing various types of spoofed data, we can train our model to adeptly detect these fraudulent attempts. Our data sources encompass diverse ethnicities and age groups, drawing from crowdsourcing companies, purchase databases, teams of skilled professionals tasked with reproducing spoofs, and our clients who have been granted data privacy consent 2D, 3D, paper, cardboard, and screen-based tests on altered documents like IDs, passports, and proof of address documents. Our machine learning models process these images, learning the subtle differences between authentic and fake identifications. Constant feedback and rigorous testing enable our models to adapt and evolve alongside the changing tactics of counterfeiters. The result is a dynamic and resilient system capable of identifying and mitigating fraud in real time, safeguarding the integrity and trust of our clients.
Thank you, guys. Yeah, so that's our office in Mexico. We do have our fraud lab. We do have a data labeling team of over 150 employees, literally trying and full-time working on spoofing the system with face masks, cardboard cutouts, videos, 4K images, and whatnot to try and spoof Encode or MetaMaps solution. Moving on to the next slide. This is just a brief overview of some of our solution. Just to walk through some of our unique differentiators with most the identity verification competitors. Encode relies heavily on AI and machine learning models. Again, it is an end-to-end fully automated solution. Our capability for running face matching on a one-to-N, which means one face against a sample size of over 1 million people, is 20 milliseconds, and it's had an over 99% rate of success as categorized by NIST. Again, NIST is the National Institute of Standards and Technology and tends to be the highest leading authority when it comes to ranking solutions like the ones we've developed. Encode was also the first identity verification provider to develop passive liveness technology. Just in case some of you are not aware, active liveness is when one of the IDV vendors or when you're onboarding a bank and it requires for you to move your face from right to left, say a few words, or any other actions that prove that you're alive whilst doing the onboarding. Again, focused primarily on user experience, we developed passive liveness technologies, which basically require a single frame selfie. We will leverage live beam technology to create a 3D map of a 2D face image. We are PAD Level 2 certified by IBETA. IBETA is the biometrics department within NIST. And that's been a game changer for the IDV industry in itself. Some of our competitors have or are slowly but surely transitioning into a similar model of passive liveness. Again, that enhances user experience and allows you to convert more customers. We are machine learning based, so we've got a templating team that will continuously enroll different types of IDs, residence permits, visas, passports into our ML library for us to be able to, one, extract data automatically from the particular ID, and two, validate the authenticity of that particular ID based on different machine learning models that we've tried and tested. We very recently were ranked #1 for age estimation, particularly for the demographics between 13 and 24 years old. So basically, with a single frame selfie, you're able to estimate the age of a particular person, and we had the smallest mean average error when it came to estimating age. It does suffer with me because my bald head doesn't help with the age estimation models. It usually says I'm a few years older than I actually am. Regarding MetaMaps product, we are plugged in to 80+ data sources. I touched upon this a couple slides during the beginning. Government's ability to allow companies like us to plug into their endpoints to allow us to cross-reference data, which should allow us to reduce fraud. We've got these data sources in over 20 countries, and our platform itself does have over 350 different verification tools. Email verification, phone verification, document verification, you name it, we've got it. The platform is quite simple to, it's quite simple to build, an onboarding flows from scratch. We've got a top-notch team, customer success team that will work closely with our clients to guide them through how to best build their own onboarding flows. We do have a booth at the end, so feel free to pop by and we'll show you a quick demo on how easy the platform is to build. I'm running out of time, so I'll push through these past couple slides. We're basically here to power your trust infrastructure with Know Your Customer and anti-money laundering solutions to enable business efficiency. Focused, again, AML, fraud detection, checking with governments. And one of our unique capabilities is once we've been able to onboard someone's biometrically, we can use that same face to leverage future transactions. We call it OTP 2.0. It's much safer to approve a critical transaction by leveraging your biometrics than it would be by receiving a one-time password via email or SMS, for example. And that's it. Just a few ending words. We strongly believe trust is the foundation for digital transformation in emerging markets. Trust is an enabler of financial inclusion. Financial inclusion is an enabler for economic growth. Just lastly, we will be having a raffle in the end at our booth, so feel free to drop by, give us your business card. We are raffling a 2-day safari. Hopefully you guys won't get rain as we did yesterday. And the other option is a spa for 2 people. Thank you very much.
Please get a gift there. No stress. Thank you so much, Ale, and I won't be able to take any questions for him because we are running behind time. So I made an adult decision for us. We need to be back here at 11:30. That's why I had to stand here at exactly 20 past so that I can give you 10 minutes to leg stretch, answer some phone calls, respond to some emails, and we'll start promptly again at 11:30. And the reason why I'm pushing us for time is because I don't want the day to delay any further. So please indulge us and come back at 11:30. Thank you, everybody.